Welcome back to the Global Business Channel. Thank you for joining us once again, and we hope you are doing fine and keeping well. In this video, we'll be discussing beneficial ownership as defined by the Financial Action Task Force, or the FATF, in its various recommendations. First, we'll go over the general overview of beneficial ownership for various legal entities and arrangements. Second, we'll delve into how the FATF defines beneficial ownership as stipulated in its guidance book for legal persons issued in March 2023. Third, we'll go over key general aspects of beneficial ownership. Fourth, we'll talk about the importance of identifying beneficial owners. And finally, we'll summarize the key points and takeaways from the FATF's definition. We publish weekly videos on topics related to offshore global business, corporate, financial, and compliance sectors. We encourage you to subscribe to the channel and give this video a thumbs up if you find these topics interesting. Lastly, for ease of reference, all videos are arranged in playlists which we have created on various subjects and topics, so feel free to go through them. And without further delay, let's get started with today's video. A beneficial owner is a person or entity that enjoys the benefits of ownership in a property or asset, even though the title or formal ownership may be in another person's name or legal entity. This term is commonly used in legal, banking, financial, and regulatory contexts to identify individuals or entities that ultimately control or benefit from an asset, regardless of whose name it is registered under. The concept is crucial for ensuring transparency, preventing money laundering, and combating the financing of terrorism. The Financial Action Task Force provides a comprehensive definition of beneficial ownership in its recommendations, which are international standards for combating money laundering, terrorist financing, and other related threats to the integrity of the international financial system. According to the FATF, beneficial ownership refers to the natural persons who ultimately own or control a customer and/or the natural person on whose behalf a transaction is being conducted. It also includes those persons who exercise ultimate effective control over a legal person or arrangement. In March 2023, the FATF released its guidance handbook on beneficial ownership of legal persons. Chapter 4 defines beneficial ownership, which states, quote, "Beneficial owner refers to the natural person who ultimately owns or controls a customer and/or the natural person on whose behalf a transaction is being conducted. It also includes those natural persons who exercise ultimate effective control over a legal person or arrangement. Only a natural person can be an ultimate beneficial owner, and more than one natural person can be the ultimate beneficial owner of a given legal person or arrangement." End quote. The guidance notes 70 to 72 state the following. 70. The terms, quote, "ultimately owns or controls," end quote, and "ultimate effective control" refer to situations where ownership or control is exercised through a chain of ownership or by means other than direct control. 71. This definition also applies to the beneficial owner of a beneficiary under a life or other investment-linked insurance policy. And 72, the ultimate beneficial owner is always one or more natural persons. As outlined in Recommendation 10 of the FATF, during the customer due diligence or CDD process, it may not always be possible to verify the identity of such persons through reasonable measures. If there is doubt about whether a person with a controlling ownership interest in a legal entity is the ultimate beneficial owner, or if no natural person exerts control through ownership interests, the identity should be determined by identifying the natural persons, if any, who exercise control of the legal entity or arrangement through other means. If no natural person is identified in its role, the natural person who holds the position of senior managing official should be identified and recorded as holding this position. This provision of Recommendation 10 does not amend or supersede the definition of the beneficial owner. Number 1, ownership and control. Direct and indirect ownership. A beneficial owner can hold ownership directly or through intermediaries. For instance, if person A holds shares in a company through another company B, person A is still the beneficial owner of those shares. Control. Beneficial ownership also extends to the individuals who exercise significant control over an entity. This includes individuals with the power to make decisions, influence policies, or direct the management of the entity, which would be executive directors, trustees, settlors, etc., to name a few examples. Number 2, types of beneficial owners. Individuals are the natural persons who ultimately own or control an asset, regardless of whether it is held in their name. For legal entities, sometimes the beneficial owner can be another legal entity, such as a trust or corporation. However, the investigation often traces back to the individuals behind these entities. Number 3, legal and regulatory context, anti-money laundering and combating the financing of terrorism. Regulations require financial institutions to identify and verify the beneficial owners of accounts and transactions to prevent illicit activities. Corporate transparency. Companies are often required to disclose their beneficial owners to ensure transparency and accountability. This helps in curbing fraudulent activities, tax evasion, and corruption. Number 4, identification and verification. Know your customer or KYC procedures. Financial institutions use KYC procedures to identify and verify the beneficial owners of accounts. This involves collecting information such as identity documents, ownership structure, and source of funds, inclusive of the evidence for the source of funds. Thresholds. In some jurisdictions, a person is considered a beneficial owner if they own or control a certain percentage, oftentimes 25% or more, of the entity's shares or voting rights. One must keep in mind that each jurisdiction establishes its own threshold for beneficial ownership, which usually at a bare minimum would be around the 20% mark. And number 5, examples of beneficial ownership. Corporations. In a company, the shareholders who ultimately control the company, even if their shares are held through intermediaries, are the beneficial owners. Fiduciary trusts. In a trust, the beneficiaries who receive the benefits of the trust, such as income or capital, are considered the beneficial owners, even though the trust is managed by the trustees. Real estate. The individual who ultimately enjoys the benefits of property, for example, rental income and sale proceeds, is the beneficial owner, regardless of whose name is on the deed. Number 1, transparency and accountability. Preventing illicit activities. Identifying beneficial owners helps in tracing the real individuals behind entities and accounts, which is crucial for preventing money laundering, terrorist financing, and other illegal activities. Enhancing corporate governance. Knowing the beneficial owners promotes transparency and accountability in corporate governance, ensuring that those who have significant control over a company are known and can be held accountable. Number 2, legal compliance. Regulatory requirements. Various international standards, such as those set by the Financial Action Task Force through its recommendations, require the identification of beneficial owners as part of compliance with AML and CFT regulations. Jurisdictional laws. Different countries have specific laws and regulations mandating the disclosure of beneficial owners to regulatory authorities and the public. For example, in Mauritius, this would be stated in the Companies Act 2001, the Financial Services Act 2007, the Financial Intelligence and Anti-Money Laundering Act 2002, and the Financial Intelligence Anti-Money Laundering Regulations 2018. Number 3, risk management. Financial institutions. Banks and other financial institutions use beneficial ownership information to assess the risk associated with clients and transactions, ensuring that they do not inadvertently facilitate illegal activities. And businesses, companies assess beneficial ownership to understand their stakeholders better and manage potential risks related to partnerships, mergers, and acquisitions. Number 1, ultimate ownership and control. The beneficial owner is the individual who ultimately owns or controls a legal entity or arrangement, such as a company, fiduciary trust, or partnership. This person may not necessarily be the person in whose name the asset is registered. Number 2, natural persons. The definition emphasizes identifying the natural persons who have significant ownership or control rather than the legal entities or intermediaries that may hold the asset or assets on their behalf. Number 3, direct and indirect control. Beneficial ownership includes individuals who have control through direct ownership or through other means, such as holding significant voting rights, having the power to appoint or remove board members, or exerting influence over the entity's operations. Number 4, thresholds. The FATF does not specify a precise percentage for defining beneficial ownership, but many jurisdictions adopt a threshold varying between 20 and 30% of control or ownership. However, entities should also consider individuals with less than this threshold if they exercise significant control. And number 5, control over legal arrangements. For legal arrangements like trusts, the beneficial owner includes the settlor, the protector, the trustees, the beneficiaries, or any other natural person exercising ultimate effective control over the trust. The FATF's guidance on beneficial ownership is encapsulated in Recommendations 24 and 25. Recommendation 24 regarding transparency and beneficial ownership of legal persons states that jurisdictions should ensure that there is adequate, accurate, and timely information on the beneficial ownership and control of legal persons, such as companies, that can be accessed by competent authorities. Measures should be in place to prevent the misuse of legal persons for money laundering or terrorist financing, including requirements for companies to obtain and hold up-to-date information on their beneficial owners. Recommendation 25 regarding transparency and beneficial ownership of legal arrangements stipulates that, similar to legal persons, jurisdictions should ensure there is adequate, accurate, and timely information on the beneficial ownership of legal arrangements, such as trusts. Trusts should maintain information on the settlor, trustee or trustees, protector, if any, and beneficiaries, as well as any other person exercising ultimate effective control over the trust. By defining beneficial ownership and setting out detailed recommendations, the FATF aims to ensure transparency and enhance it, and prevent the misuse of legal entities and arrangements for illicit purposes. In summary, a beneficial owner is the individual or entity that ultimately owns, controls, or benefits from an asset, even if it is held in another name. Identifying beneficial owners is crucial and critical for ensuring transparency, regulatory compliance, and preventing illicit activities in the international financial system. Our next video, which will be released in 5 days or on August 25th, 2024, will cover the summary of the entire guidance handbook issued by the FATF on beneficial ownership of legal persons, issued in March 2023. Thank you for sticking around until the end. Your support means a lot to us, and we hope you found the information, insights, and key points valuable. We'll continue to share informative content, so please do return and subscribe to the Global Business channel for insightful videos on the offshore global, compliance, and financial services sectors. Take care, stay safe, and we'll catch you in the next one. Cheerios, guys.